Hi everyone, in this video I'm going to do a bear versus bull case for Amazon stock. These are really fun to do, so I can't wait to get into it, so let's get started. Let's start with the bull case for Amazon stock, and it all starts with Amazon Web Services. The segment generated 20.5 billion in revenue in its most recent quarter and operating income of 5.4 billion. That was an operating profit margin of 26.3%, and the segment is growing over 25% in each of the last 5 quarters. And in fact, the rest of Amazon's business actually lost money. Amazon Web Services has been carrying the load in recent times. The next thing I'll highlight is Prime subscribers. Amazon boasts over 200 million Prime members. These people pay an annual fee or a monthly fee to have access to fast and free shipping, as well as access to Prime Video in many countries. And these folks purchased more than non members do. So this is a double benefit for Amazon. Third, I'll mention advertising. Amazon is quickly becoming an advertising giant. Amazon's advertising revenue business has grown from 7.6 billion in the third quarter of 2021 to 9.5 billion in the third quarter of 2022. It would not surprise me if this continues growing, reaching nearly 20 billion in revenue quarterly. That's because Amazon, like I mentioned earlier, boasts over 200 million Prime members and hundreds of millions more of other shoppers that come to the platform ready to make a purchase. These buyers have their payment information on file with Amazon, and they're one click away from making a purchase. So if you're a business, you can't get any closer to the customer purchasing decision than in advertising with Amazon, right? There may be others, but Amazon has that proprietary patented one-click technology for the purchase. So that's as close as you can get. So of course, as a marketer, you want to get in front of that buyer that's that close to making a purchase. If you show them the right advertisement, you can make a sale. And ultimately, that's what marketers want to do. They want to convince you to buy their product, and what better place to do it than on Amazon. So I expect this part of Amazon's business to continue growing. Worldwide logistics network advantage is with Amazon. This competitive advantage will be difficult for any business to overcome. Amazon has spent hundreds of billions of dollars creating this network. It will be difficult for anyone else to replicate, to raise that kind of capital, to allocate to it. It's going to be hard to raise that kind of capital, because what investors would want to support another company trying to compete with Amazon in logistics? First of all, you're going to spend hundreds of billions of dollars. Second of all, you don't know for sure if it's going to work, if you're going to be able to replicate what Amazon has created, and if you're going to attract the customers, the merchants, to make that investment worthwhile. So it's unlikely for Amazon to have any encroachment in that side of its business. All right, now let's look at the bear case for investing in Amazon stock. So it has very skinny profits. Despite generating hundreds of billions of dollars in sales, Amazon has never achieved an operating profit margin over 10%. And it's unlikely it will ever achieve that kind of profit margin. It's just hard to see how Amazon can make money selling millions of low priced items and delivering them to your home quickly and for free. Right? How can it make money delivering shampoo to my house that I bought for $4? I'm a Prime member, so that's a free delivery. How is it going to make money on that? It's hard to see it being able to make money on that. It needs so many things to go right, so many people in the neighborhood to order all in the same time frame, or at least one household to make bigger purchases, to collectively combine the deliveries and all that. A lot needs to go right for Amazon to turn profitable. That's one of the cases against investing in Amazon stock. Secondly, negative cash flow. Over the trailing 12 months, Amazon's free cash flow is negative $19.7 billion. And this goes to what I was mentioning earlier. It's hard for the company to turn profits when it has to deliver these low priced items to your doorstep for fast and for free. And all this is taking away. Of course, it has the AWS, very profitable, but the rest of its business, the e-commerce side of the business, is really weighing down the company's profitability. And that's my third point. How can selling an extremely wide assortment of inexpensive goods and offering fast and free delivery to people's home ever be a lucrative business? I don't see the case in that. Maybe 5 years down the road, maybe 10 years down the road, when it's got, a fully electric vehicle fleet with very low energy prices, and then it's got driverless technology in those cars so it doesn't have to pay drivers. Maybe then, or maybe drone delivery so that it doesn't need cars at all. Maybe then it can be, but that's a long time from now, and that's I don't know what the probability of that is. And finally, the stock isn't cheap. It's selling at a forward price to earnings ratio of 59.73. All right, so there's my cases, both my bull case and the bear case for investing in Amazon stock. I'm wondering what you think, so comment down below. I'd like to hear your thoughts, which side of the argument you're in favor of, which side of the argument you think carries more weight. All right, that's all I've got for this video. Thanks for watching. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.